Welcome, everyone. Another episode of Back and Forth with Becker and Orr. We're going to have some fun today. Kevin, we got lots to cover. What are we going to be talking about?
Yeah, we're going to take a few topics today. We're looking at whether or not we're actually in a bubble right now. Of course, the biggest item going on in Winnipeg this weekend was what's happening with Patrick Laine after the trade. Beyond that, we're going to answer a question from our viewers of the week, and we'll start moving from there. What do you got to start?
That sounds good. You can see all the topics at the bottom there. Before we get into it, a reminder, please like and subscribe. That way you won't miss any of the action. You'll be notified of all the videos. And let's start with the big question, many investors' minds. Are we in a bubble? 2020 was quite the year. The economy went through the pandemic, the recession. Stock market kept going up. You had this phenomenal recovery. Kevin, I'll throw it to you. Are we in a bubble?
No, I don't believe we are. I mean, every year we hear there's a bubble. I mean, there's a bubble for this. There's a bubble for that. The only two bubbles I've seen in the last 20 years are the tech bubble back in the 2000s and the housing bubble that came around 2007, 2008. But as you can see on the chart that you've got right there, 2017, is the stock market in a bubble? 2016, are we in a bubble again? Every year somebody's forecasting a bubble. Now, there are signs to deal with this, but I mean, I wouldn't exactly say that we're in a bubble. What's your view?
Yeah, I'm the same way. And this is from Ben Carlson, A Wealth of Common Sense. He went through and he found articles every single year from Forbes, CNBC, USA Today, CNN Money, a whole list of different ones. And every year for the last 11 years, someone has been predicting we're in a bubble. And of course, that has not been the case. Markets have continued to go up. Now, in general, I'd say we're probably not in a bubble, but there are areas of froth. Hard to escape them. That's what gets the headlines. The IPOs would be a perfect example of that in 2020. They had a record level of capital that was raised through IPO. Some of the IPOs were just jumping through the roof. People are tripping over themselves, Kevin. Get in on these high-risk investments. Snowflake, DoorDash, Airbnb, they just jumped. The stocks soared right out of the gate. So it's hard to avoid those areas of froth. But like you're saying, I don't think that means we're actually in a bubble for the overall market.
No, I agree with that. And I think some of this has to do with I can't go to Vegas, so I'm going to bet somewhere. Let's put the money in the market. I mean, if we even take a look at the last few days, GameStop and BlackBerry, they've almost doubled, and there's been no news for this whatsoever. I think it's the Robin Hoods of the world are getting in. Hey, let's buy this company today and see how fast we can drive it up. Make a few bucks, and then I don't have to worry about it. But yeah, I mean, you're right. There's froth everywhere, but that doesn't lead to an automatic bubble being created from there. On that note, though, I mean, go on.
Pockets of speculation. You hit it on the head there. And one of those pockets, I think, was Tesla. Now, that's where you're going to get it into, Tesla. And this is a great chart. Why don't you walk us through this, Kevin?
Well, yeah, as we can see, Tesla by market cap is the biggest car company in the world. Even though they do not produce a whole bunch of cars, they are still listed as the biggest one. It's sort of bigger than the next six combined. And again, I think a lot of this has to do with the fact that it's not looked at as an automaker. It's looked at as a tech company. Oh, okay, well, yeah, we use all the same pieces to make the cars, but we're increasing how we're doing batteries and stuff along those lines. So, I mean, they've got a variety of different options going on. I mean, what's your view on Tesla as a whole?
Yeah, I would agree. Now, I don't know why the price is what it is. First off, this is from thedrive.com. They did this end of December, so not even a month ago. And at that time, Tesla was worth $630 billion. Today, it's worth over $800 billion. So it's continued to climb. It's gone even higher since this chart was made 3 weeks ago. But my view on Tesla, I think you're right. Most folks, when they think of an automaker, they think Ford, they think GM. Those are companies grounded in fixed costs. They got big factories, expensive to make cars, they have unions. It's not like a normal tech company. And when you think of a tech company, like a cloud computing company, they have very little fixed costs, right? And there's normally a story going around how they're going to change the world, disrupt the markets. And that's the story people think about when they talk about Tesla. Even though they still have factories and still make cars the same way Ford and GM does, they don't get viewed in that light, right? So they don't get the usual car manufacturer valuation. They get the tech company change the world valuation. And as we've seen, that's a completely different number. But do you think investors are going to be missing some of the boat here? I mean, they're not the only ones making electric cars anymore.
No, exactly. I mean, if you look at it, I believe that, if you combine Ford and GM right now, they're making more electric cars than Tesla is. Not only that, but I mean, Ford is looking to get only renewable energy into all of their plants around the world by 2035. And GM just set up a deal with Microsoft dealing with autonomous cars and things along those lines. So I think at the end of the day, the main car companies are going to produce a lot more electric cars. But as we've said, Tesla is looked at as a tech company. They don't realize they have all these other costs. Elon Musk has done a great job and probably will continue to do that going forward. So we'll have to wait and see whether that climbs over $1 billion in market cap or whether we see anything else going on from there. Yeah, other than that, though, I think it's time to start touching on what's the biggest thing that happened in Winnipeg over the weekend. What would you say it was?
Yeah, well, clearly it's Laine. It was a big trade. It was a big trade. There's speculation that would happen, but then we kind of started the season. The speculation simmered, and then over the weekend, the news just broke. Laine is going to Columbus. Dubois coming here. I know there are other parts of that deal, but that's really the headline. It was Laine for Dubois. Yeah. And I read the paper, the Winnipeg Free Press, wrote down the headline the very next day. Free Press headline, Laine trade looks bad on Jets. Do you agree or disagree?
Well, and that's the thing. I think everybody in Winnipeg's the same thing. We got shafted on this trade and we just gave away something for nothing. But if we take a look, Pierre LeBrun put out an article on The Athletic. They interviewed 10 top executives in the NHL. 9 out of the 10 think we got the best end of the deal. Finding a 1-2 center in this league is almost impossible at the age of 22. So picking this up just really strengthens us down the middle. And you can replace wingers, they say. Now, I don't know that you can replace 50 goals a year by any stretch of the imagination, but the proof's going to be in the pudding. This is something we'll be able to evaluate probably 2 to 3 months down the road once they all get to play. Other than that, yeah, I mean, it's a hard call as to which end got the better of the deal.
Yeah, it's tough. I mean, the Winnipeg factor, probably what was motivating that headline I just read from the Free Press, is kind of the callback, right? Everyone remembers Solani, the Finnish Flash, and then Laine was like the next generation of that, a superstar player, scoring goals. Could he be like the next Timo Solani? I think in Winnipeg that held a lot of capital. People really liked that story, and now that's gone, right? So it was immediate pain. Those are some really big shoes to fill for Dubois, and I don't think Dubois is that kind of player. He's not going to get you the 50 goals a year, but he could make a huge difference as a strong center on the right line for the Jets.
Yeah, the potential that we've possibly given up for Laine, I think, is the big factor, and depending on how many goals he starts scoring going forward as he enters his prime, that'll dictate the deal as a whole. But overall, it was definitely something that nobody saw coming. I mean, we thought it might happen in summer, but to have it happen, 6 games into the season, very rare. But
and that's something to touch on here is how this trade came to be. It was really from Dubois, right? He signed a deal in the offseason and then decided he didn't like that deal. He wanted to be traded. He wanted out of Columbus. So like in a few days there, all this just kind of came together. So it was really Dubois that initiated the whole trade here.
Yeah, it's amazing what one bad shift in the NHL can get you. You get to see where you're going after that. I don't know if Winnipeg was top of the list, but Mom and Dad are here for him, so you get some home cooking, and we'll see how it plays out that way. Other than that, I tend to watch this all live events, but the big thing going forward, I think, is now that we have to look at what's on TV, streaming becomes the big thing. What do we have to say about Netflix?
Yeah. The numbers came out, it was recently that Netflix announced their subscriber numbers. They're over 200 million subscribers. You can see in the chart there. This is from Charlie Biello, and you have 2 different parts of that table. The first part just shows the Netflix numbers climbing from, practically nothing in 2001 all the way up to 100 million by 2016. And then in the last couple of years, they doubled another 100 million, and a big chunk of that came in 2020. No surprise, the pandemic, people are at home, they're watching TV, they're consuming content, so subscription numbers went way up. And then how they did it, that's really the story of that second chart. It shows you the Google searches for TV shows and for movies. And for TV shows, Netflix has got pretty much 9 of the top 10 for Google searches for TV shows, and it's all their original content. Is that what you're watching, Kevin? Are you watching these Netflix shows?
I am seeing some of these. I mean, the Ozarks, the Queen's Gambits, the Tiger Kings of the world. I mean, you're stuck in a pandemic. All of a sudden you read something online and, well, maybe I should watch this. Everybody else is seeing it. What should I do? I think the amazing thing is to look at it took them 16 years to get 100 million subscribers, and it took them only 4 to get to 200 million. So, I mean, to me, it's the traditions are changing. You're going from that traditional ABC, CBS, commercial live TV to everything being streaming. I mean, the big factor is you've not only got Netflix, you've got Disney Plus, you've got HBO Max, you've got the Peacock network. Everybody's creating their own network just because they're finding that live TV is going away. But yeah, I mean, I see some of these new shows and it's sort of like, okay, the fact is I don't have to wait week to week to week. I can, binge watch it all over a weekend if I really wanted to. But that's sort of the area that I'm looking at. More services to offer, a few more shows to go on. I think they've done a good job. You?
Yeah, that's true. That is very true. And part of it, though, for Netflix, and not just Netflix, but in general with the pandemic, we're seeing acceleration of trends. When Netflix had gotten to 200 million subscribers without the pandemic, probably it has happened a lot faster because they were in a spot to benefit when everyone's locked down, everyone's at home. And with that, let's move on to the question of the week. And I think this is one that's on everyone's mind. You have all these stimulus programs. Governments are spending money trying to prop up the economy. The debt numbers continue to go up. So, Kevin, Is there too much government debt?
Yes. Put it simple. I get the way to look at it is going to be a variety of different things. If you look at it as how much you're paying as a portion of GDP and things along those lines, no, we're still fine. I mean, basically you're at historic low interest rates. So the amount of money that's being paid on the debt is relatively low. That's going to become a problem if and when we start seeing things move up. If you get inflation, if you get interest rates to move, then I think we're going to be in a big problem. At present, no. I mean, there's a lot of debt sitting out there on the books that's going to have to be taken care of, whether it's this generation, the next generation, or you keep pushing it down, kicking the can down the hill. That's going to be the way to look at it. I think that there is a ton of debt out there, but at the moment, it's all serviceable debt. So
yeah. And that's key. That's very key. The net interest expense is low. Interest rates are at rock bottom. So if there's a time to pile on the debt, they can afford it now. I think you have a couple of issues. Is one, do they stop? Once the government gets the idea of sending everyone checks, I don't know. Maybe I'm skeptical of governments and their will to stop the spending, but I think you can get into a habit there. And then the issue is that now it might make some sense to spend on when we're in a pandemic and a recession, but is that going to stop when things start to get better? That's kind of a big question. If it doesn't, then you can get into a bit of an issue. And then the other one, as you kind of touched on, is inflation. Eventually, we open back up. People have been cooped up for a while. They get back to the economy. They get back to spending. Prices can start to rise. And if you get inflation kick in, normally interest rates go up a little bit, and that can get pricey when it comes to that big chunk of debt. So there's a lot of issues to think about here. But in the short term, Kevin, do you think this is going to have an impact for investors?
The debt thing, I don't think so. I think that free capital, people are going to want to put it into the market when they can open up and things along those lines. But from a government perspective, yeah, or I think you could see higher taxes down the line. You could see an increase in the capital gains tax or stuff along that line. Or theoretically, even what they've done in Argentina, where they've put a wealth tax on people already. So these are things that we have to worry about, not in the immediate future, but it is something to concern yourself down the road. Any last points you want to add on that?
I think we covered them. So a reminder, folks, you can certainly visit us. You can always go to our website, beckerorr.com, or if you want to talk to us directly, we do have a special page set up for that, Chat with Clinton and Kevin. Go there, fill in the form. More than happy to answer any questions you might have. Maybe you have a topic to discuss, you want a little more information, whatever it is, chatwithclintonandkevin.com. Any parting words, Kevin?
Nope, I think you've covered it perfectly. Until next week, we get to say goodbye.
That's right. Take care.